the next trading strategy I want to take a look at is the pullback trading strategy. And this right here is, a trading strategy that all traders need to know about, in my opinion. It's one of the most common and one of the, at least in my opinion, one of the best trading strategies, because by trading pullbacks, we trade in the same direction as the trend, and we aim to enter at a point in the market where we can catch the next impulsive move of the trend. And remember, impulsive moves are these strong moves that goes in the same direction as the trend. So this can often be a favorable position to enter in the market. But before we dive into the charts here, let's take a look at some brief overview of the pullback trading strategy. And as I already mentioned here, pullbacks are one of the most important structures and one of the most important patterns in trends. And here, when it comes to pullbacks, we have many different patterns and names for pullbacks. For example, we have structures called flags, we have pennants, wedges, and there are tons of different specific variations of pullbacks. And while it can definitely be a good idea to learn about all of these different pullback patterns, the fundamentals of all pullbacks are actually the same. So for example, a pennant is a pullback that looks maybe something like this. So right here we have the pennant, while a flag is more of a structure that looks maybe something like this right here. But the principle of both of these patterns are the same. We have an impulsive move, then the price pullbacks, cools down for a bit here, and our goal here is to catch the next impulsive move. What is the setup here for the pullback? Well, what we're looking out for here before we trade the pullback is that we want to see a strong momentum move before the pullback. So the impulsive move before the pullback appears, we want to at least preferably be, a very strong move here towards the upside. And when it comes to the entry or the triggers for the trade, so what signals are we looking out for here to enter? We have two main different ways to enter. The first way to enter is to enter the trade by buying near support in uptrends or selling near resistance in downtrends. And by buying near support, I mean that we're trying to buy near the support of the pullbacks. So for example, trying to enter right around here. But we also have another entry trigger, and that is to enter by buying the break of the resistance or break of the support. So in the case of an uptrend, this is when we enter where the price breaks above the resistance. An example of this can be found right here. And what about the stop placement? Well, in most cases, we want to place the stop loss below the low of the pullback. And many times in this case, I often like a wider stop loss compared to the failure test pattern. The failure test pattern is a pattern where, if the price just slightly dips below the wick of the pattern, we want to exit the trade right away, because that is a clear sign that the market is not behaving as we, thought it would behave. But when it comes to pullbacks, we can actually allow for a wider stop, because many times it's hard to determine how deep a pullback will actually be. So it's possible that we enter and we get another counter trend leg against the direction of the trade, but this can still be a valid pullback. So at least in my personal opinion, I like a little bit wider stop loss when it comes to pullback trading compared to the failure test pattern. And what about the profit target? Well, for the profit target, we have mainly two different methods. We can use a measured move objective that we have been talking about earlier in this course, or we can use a fixed risk to reward ratio. But you can also, of course, use more advanced methods. Many traders will use different kinds of price action signals that tells them that, this is a trade I don't want to be in anymore. So they can basically use discretion to exit the trade. So now let's just take a quick look at the pullback trading strategy here in a real market. We're looking at the Australian dollar, US dollar on the 15-minute time frame. But pullback trading strategies you can use in pretty much all markets, pretty much all time frames. The only recommendation I can have here is, make sure that you're trading something that has sufficient liquidity. So trading pullbacks in very small altcoins where you don't have a lot of buyers and sellers can many times be more risky than trading it in, a larger for example, a forex pair or a larger cryptocurrency, like for example, Bitcoin. But now let's analyze this chart right here. The first thing we can notice about this pullback is that before the pullback appeared, we had a very strong impulsive move, we had a very strong trend leg, and that is a good sign. And then we actually, right here, we saw the actual pullback appear. And remember from earlier in this course, I talked about some signs we're looking out for in pullbacks. One sign is that we're looking out for mostly small candles. And as you can see right here, we have mostly small candles. And we're also looking out for candles with different colors. So we want to see both, preferably, you know, both red and green candles. You can see that we also have right here. We also have multiple wicks, which is yet another good sign. But what about the entry here? Well, let's talk about both the entries. So one entry point is to try to enter at the support. And in this specific pullback, I do think this right here was the best entry. Because first of all, you can see that the wick of this pattern just taps the support here. You can actually also use the failure test strategy where the price quickly dips below support and then pushes above. Then you can use the sort of failure test entry. You enter at the candle close that closes above the support and you set your stop loss below the wick. But it's also possible to enter here when the price just taps the support. Another thing that I like about this entry was that this candle right here was actually a hammer pattern. It was almost like a dragonfly doji, which in itself is a bullish pattern. So that can slightly improve our chances of success. So you can enter right there. Let me just, you know, do an example of an entry position. So use our long position. Let's say that we enter at the candle close of this candle. Then I would probably set my stop loss somewhere around here. As you can see, I leave, you know, a wider stop loss. And why do I do this? Well, because then we can allow for the price to go up here and continue the pullback and perhaps bounce off that low before the next impulsive move. So if we leave some wiggle room, we can, you know, extend the possibility of, we can, you know, allow for the possibility of the pullback being extended here and still not be stopped out. I hope my, you know, language is not confusing right now, but this is basically the reason why I prefer a wider stop loss when it comes to pullbacks compared to failure tests. And as for the profit target, as we talked about, we can either use a fixed risk to reward ratio. So a risk to reward ratio of 2 would simply look something like this. You can also try to catch wider moves by doing the whole measure move. So you measure the move here before the pullback. So we measure all the way from low to high. We take this measurement, measure from the low right here, and I'm not even sure this trade would succeed. Well, in this case, you can see that the uptrend actually continued. So we would have locked in our profits, but this would have taken quite a bit of time. You can see the uptrend continued. We consolidated here for a while, but eventually the uptrend continued and we reached our target. The other entry method here is to enter at the break of the pullback. And when we enter at breaks, what we're looking out for is actually pretty much exactly what we saw right here. We want to preferably see a strong momentum candle breaking up to start the next trend leg. And in this case, you can see that we had a strong momentum candle breaking above. The common entry point is to enter at the candle close of this candle right here. And when it comes to stop losses for the breakout, you can once again set the stop loss below the low of the pullback. In this case, you can have a tighter stop loss compared to the low we have right here. So you can have it pretty tight. And once again, for the target, you can use a fixed risk to reward. Perhaps a 2-to-1 would be the target up here. You can see we eventually reach this target, right? But you can also use the measured move objective strategy. Alright, so this video was actually just a very short clip from our full market structure course here on the channel. And you can access the course completely for free by just clicking or tapping on the screen right here. I hope I will see you all in the full course very soon. Take care. Ciao, ciao.